Hey everyone, welcome back. Hope you guys are having a great Wednesday. So, hump day, we're middle of the week. We got some good news, obviously, from the president. He signed an executive order on cryptocurrencies, so we'll take a look at that. We also have a story on possibly going into a new monetary era, so we'll take a look at that. And then we also have a story on Hive, a little bit more update on the purchasing of the Intel miners, so we'll take a look at that as well. First, we'll get into the miners, see how they did today along with Bitcoin, see what's going on with it. Obviously, it was a great day for the miners and for Bitcoin. So let's get into it without further ado. And as always, not financial advice. These are the companies I'm invested in along with coins for full disclosure. So let's get into the miners here. So obviously, Annie today was up slightly. It didn't do as good as some of the other miners did, but it was up 1.56% to $1.95. On the day, Argo was up 18.67% today, which was a huge jump for it, obviously. Bitcoin was only up about 8-9% or so. So like I said before, when Bitcoin goes up, these guys typically go up 1.5 to 2x of what Bitcoin does. And we're seeing that here in Argo. So Argo was up 18.67% to 89 cents. So great day for them. Bitfarms was up 8.68% to $3.63 as well. And we're having a pretty green day here on the miners. Cleanspark was up 10.79% to $11.19. And you can see that it actually started out early in the morning here. It was trending higher even before the market opened up. Core Scientific was up 2.5% to $7.37. It was up higher than that, but obviously came down later on in the day. And Digihost was up 14.89% to $3.01. DMG was up 11% to 51 cents. Hive was up 8.72% to $1.87. Hut was up 11% to $5.64. Nice run up by them as well. Iris Energy was up 9.61% to 1643. Marathon was up 14%, 14.9, almost 15% to 2568. Mawson was up 9.4% to $3.26, and Riot was up 11.52% to 1684. So a great day, obviously, for the miners. Like I said last week and earlier this week that I was buying, I did buy some more Bitfarms stock earlier this week, and I did buy some Rivian stock as well earlier this week. So like I've been saying all along, buy the dips if you can afford to. Dollar cost average is the best way to go because we are obviously in this downturn. It may last a little bit longer, but I think eventually in the long run, if you're a long-term investor, you will do just well going forward. So let's take a look at Bitcoin here really quick. Bitcoin obviously shot up nicely. The news came out, when was this? Yesterday around 9 o'clock, we had a story right around 8 or 8 o'clock that Janet Yellen office provided a press release or released the information a little bit early. People got wind of it. It went all around the interwebs, on Twitter, everywhere else. And we saw obviously a huge jump in price of Bitcoin. And we still continue to go up ever since then. We did peak at around 42,574. I believe that was the high for today. Yeah, 42,597.84 cents was the high today. We are at 42,039 right now. So obviously a great job by Bitcoin going up higher. Nice thing to see, obviously, on the 1 hour chart is the RSI has come down, even though last time we were here, we were at this price. So price has gone up. RSI has basically stayed flat, but excuse me, it gives me hope that we can continue this rally up a little bit more before we come back down a little bit. Like I was saying yesterday, I thought we were possibly, because we're right around here, possibly looking to go down a little bit, maybe go up, like I said, and then come back down. And we went way up, more than I thought it was going to happen. So obviously great for everybody here. Let's take a look at Ethereum really quick as well. Ethereum obviously followed suit. So did the other coins as well. And Ethereum right now is battling with the 20-day moving average here on the chart, which is the red line here. And obviously the RSI has come way back down here. And last time we were here on the 1 hour chart, the price was around 2,622, and now we're at 2,733. So I think we got obviously more room to run now. Things change. Things are dynamic in the crypto land. So whenever things change, we got to reassess, see what's going on. And, time, not trying to time the market because you're going to have a hard time timing the market. But at least we can see what potentially could happen going forward. And I think we may have obviously a little bit more room to run up here into the, maybe test the 3,000 mark within the next couple of days to a week or so, I think, as long as nothing else bad happens. Let's take a look at Bitcoin's hash rate really quick as well. So we can see here total hash rate has been increasing. We did have a peak here at 214 million or so, and we've come back down. We are at right around 194 million on the 7-day average. Raw values look around 202, so we are still in that slide up, obviously in that range going up, which is going to continue on. We know all the miners are getting more ASIC miners get installed. That's just going to drive the hash rate up even higher as we go forward. All right, so let's take a look at the first story here. Obviously, Biden just put out an executive order on cryptocurrencies. Here's everything that we need to know. I've highlighted the important parts of it, and we'll talk about it. I'll give you my input on it as well. So it's long-awaited directive that has had the crypto industry on edge, not least due to growing regulatory concerns around the world surrounding the nascent digital asset. Yes, we've had this for a long time. It's been kind of hovering over our shoulders here, and now we don't have too much clarity, but at least this builds on a framework for us to move forward. The crypto market got wind of an executive order overnight after the Treasury accidentally put out a since-deleted statement calling it historic and releasing some of the details ahead of time, and that obviously drove the market up higher last night and into today. The order was obviously finally signed today by President Biden. And here's the things that they're looking for. So protecting consumers is the main thing. Obviously, the measures announced Wednesday will focus on 6 key areas. So consumer and investor protection, financial stability, illicit activity, U.S. competitiveness on a global stage, financial inclusion, and responsible innovation. So protecting consumers is an important part of the directive. There have been countless stories of investors falling for crypto scams or losing huge sums of money through cyber attacks on exchanges or users themselves. It also wants to regulate to ensure sufficient oversight and safeguards against any systematic financial risks posed by the digital asset. So that's all good and dandy. The biggest thing, obviously, is on exchanges. If you have coins on exchanges, you're at their mercy. If they get hacked, your coins are gone. Hopefully, it's a big enough exchange where they do have sufficient funds to cover you in case of any losses. But the best thing is, if you're trading, trade a little bit of your coins, don't trade all of them out on the exchanges, and take the rest of them out, put them in your hardware wallet like a Ledger or a Treasure or something like that. But don't keep them on exchanges. I don't keep all my coins on exchanges. I don't trade them that much anyways. I'm probably going to take all my coins, put them on my own hardware wallet because I'm holding them on for a long time. So the best thing you can do right there is just move your coins off exchanges, and I think they need to educate consumers on that. While policymakers have been keen to downplay any systematic risks resulting from crypto, there have been increasing concerns over the role played by stablecoins. So Tether, obviously the world's largest stablecoin with 80 billion in circulation, has attracted the ire of regulators over claims its token is not sufficiently backed by dollars held in reserve. Tether says its coin is fully backed. However, the makeup of its reserves includes short-term debt obligations like commercial paper, not just cash. So that's obviously a concern for them. And I think that's going to lead to CBDC, I think. What do they call that? We'll get into it down below here. So illicit activity, another key area Biden's executive order focuses on, is rooting out illegal activity in the crypto space. The president has called for an unprecedented focus of coordinated action from federal agencies in mitigating illicit financial and national security risk posed by cryptocurrencies. He is also urging international collaboration on this issue. So this would be possibly in response to the sanctions on Russia recently. They want to make sure that they can't skirt the system somehow and obviously use Bitcoin. And they say it here. So following Russia's invasion of Ukraine, authorities are now also concerned about possible use of crypto in helping sanctioned Russian individuals and companies evade restrictions. Proponents of crypto say it's highly difficult for funds to be laundered through digital currency. However, as all transactions are kept public in an unchangeable record-keeping system, obviously blockchain known as blockchain, it's all viewable by everybody and anybody. So there are obviously points to this. Yes, you can see all the transactions on there, but you can still get into other tokens. You can swap them, and you can do all this weird stuff. So I'm not a crypto expert at any means on this, but I know that people have been able to basically circumvent a little bit of the system, try to lose the trail somehow from going from Bitcoin and things like that. So there's always that possibility there. So I think that's going to be a little bit more regulated on that part. And then as far as individuals, you still need on-ramps. So depending where, that's a tough one. Because if you're in Russia or something like that, a sanctioned country, you would have to basically buy the Bitcoins at one of their on-ramps, which would be a bank or an exchange or something like that. Or you would have to have basically like a dual citizenship where you could do it in another country where you have access to an on-ramp there also. So there's obviously a lot of regulation that has to be worked out there, I think, but it's going to come. In the long run, I think it's going to be good. We'll have to see how this plays out, though. But so far, this is all good. Climate change, so it's more subtle point, but Biden has also dropped a mention of the sheer energy cost baked into digital currencies like Bitcoin. He wants the government to study ways to make crypto innovation more responsible, reducing any negative climate impacts. And this is all fine and dandy. Bitcoin has obviously, or draws a lot of energy, that's known. But a lot of that energy is now becoming green with people going to Texas, Canada, other countries that have like hydropower, wind power, solar power. Those types of things are being more introduced into the Bitcoin ecosystem than ever. And I think that's going to continue on because investors are looking for that. And companies that do mine Bitcoin want to have clean. They don't want to have dirty Bitcoins basically from coal plants or things that produce a lot of carbon emissions. So I think that trend is going to just only increase over time. It's already increasing drastically from where we were just a couple of years ago, and it's going to continue on. The miners are also getting more efficient. There's talk, obviously, of miners that are going to be possibly, quotes, 440 terahash and be about 2,500 watts, which is just ridiculous efficient currently. So those would be like the 3 nanometer chips and things like that. And then if we get even lower nanometer chips and technology improves, things will obviously improve as well. And obviously the miners also say that they are helping the grid, which there are cases of them where they are helping the grid when there's a lot of power. They're using it when the power is needed to run house heating, cooling, whatever it is. They do shut down and provide that extra electricity back into the grid when it is required. So they are kind of having a flat line to the grid instead of these peaks and lows and valleys and things like that. So that I'm all for that as well. So I think that's good. Climate change, let's see here, competitiveness. So part of the language in the White House announcement focuses on giving the U.S. a competitive edge over other countries when it comes to crypto development. This is especially significant now that China has effectively banned cryptocurrencies. And if we, just look back a couple, maybe decade or two, China also wanted to ban the internet, right? Freedom, they don't like it. Internet has obviously spurred a huge amount of innovation in the space, leading to basically smart cell phones that gave us internet in the pocket of our hands, maps, music, videos, everything is now basically the web. So this is going to transition to Web 3.0 with the introduction of cryptocurrencies, and this is where we're heading to. And this is something that obviously China wants to control, and eventually I think they're going to get back into it, but right now they just don't want to be allowing it until they have control over it, I think. They do have their own digital yuan, I think, and that was just the start of it, and I think this is going to progress going forward from there. But that's just what my 2 thoughts are. So Biden has tasked the Department of Commerce with establishing a framework to drive U.S. competitiveness and leadership and leveraging of digital asset technology. So this is all good. Excuse me. The Blockchain Association, an organization that represents multiple well-known crypto companies, said Wednesday that Biden has the opportunity to ensure America remains the global leader for technology innovation for years to come. Completely agree with that. Digital dollar. So finally, the Biden administration also wants to explore a digital version of the dollar. It comes as China has led the charge towards central bank digital currencies, or CBDCs, with more and more people using smartphones to make payments and handle their finances. Biden isn't saying whether the U.S. should launch its own digital currency. Rather, he's calling on the government to place urgency on research and development of a potential CBDC. There are obviously risks with it. Some of the downturns, there's a lot of positives to it, but there's also some downturns to it as well. One could be obviously if, for whatever reason, you get your money is in a CBDC, you want to make a payment, and the government for some reason thinks you shouldn't be allowed to have access to your money. You don't have access to your money. So I think there's going to be a fine line where we still have cash, I think, and this digital version of the dollar to make payments a little bit faster, but people still should be able to have, a regular physical dollar that they can access if need be. But we'll see how that plays out. So while CBDCs could rapidly speed up the settlement of payments, policymakers are evaluating a number of issues around financial stability and privacy. So there's that part. And then Watershed Moment. So the delivery of the new policy agenda removes a key source of uncertainty for an industry that has already been rocketed by numerous regulatory hiccups and scandals. So we know earlier this year, crypto startup BlockFi was hit with a record $50 million fine by the U.S. Securities and Exchange Commission over allegations it violated securities laws with its retail lending product. The penalty was part of its larger $100 million settlement, which included payments to 32 states. This was huge, and it's obviously one part of it where obviously the innovation is outpacing the regulatory frameworks, and they obviously got slapped for it. And Coinbase has similarly run into trouble with the watchdog, though it managed to avoid punishment. The SEC threatened Coinbase with legal action. This happened late last year, right around, I think it was October or September, right around there. Legal action over a product similar to BlockFi, which offered users interest payments on their crypto holdings. The company subsequently dropped plans for the service, and because SEC said we're going to basically sue you. And then we have this. So this is a watershed moment for crypto, digital assets, and Web3, akin to the 1997-1996 whole of government wake up to the commercial internet. Jimmy Ellier, CEO of crypto from Circle, said on Twitter, which I agree. This is that defining pinnacle moment where we recognize the benefits of it, and embrace it. So overall, I think this is really good. There isn't a lot in there as far as, I think there's some language in there as far as who should do what, but they still have to study it. They still have to come up with proposals. So this isn't actually like regulatory framework that we can work with. We'll have a lot of back and forth between the right side, left side, middle side, whatever. They're going to be discussing it. And it's going to take a while. It's probably still going to take at least a year to 2 years to get everything written down and into law, I think, if not more. So, but at least this is a good sign that we are going in the right direction, in my opinion, at least. Okay, let's take a look at another story that's a little bit worrisome, to possibly do some. So Credit Suisse strategist says we're witnessing birth of a new world monetary order. Money will never be the same again after the Ukraine war, writes Zoltan Pozar, and Bitcoin may be the beneficiary. So if you're a Bitcoin maximalist, this is good for you. I like Bitcoin. I love Bitcoin and I love cash, so I don't want to be away from both of them. So the former Federal Reserve and U.S. Treasury Department official and now Credit Suisse short-term rate strategist Zoltan Pozar has written the U.S. is in a commodity crisis that is giving rise to a new world monetary order that will eventually weaken the current dollar-based system and lead to higher inflation in the West. This crisis is not like anything we've seen since President Richard Nixon took the U.S. Dollar off gold in 1971, wrote Pozar. This is going back to, obviously, the Bretton Woods Agreement back in when 44 countries negotiated after World War II. And then we obviously had the 1971 when U.S. abandoned the gold standard. So here's some background information on that. So as the initial Bretton Woods era of 1944-1971 was backed by gold, and Bretton Woods II in 1971 to present, backed by inside money, essentially U.S. government paper, suppose Bretton Woods III will be backed by outside money, gold, and other commodities. Pozar marks the end of the current monetary regime as the day the G7 nations seized Russian foreign exchange reserves following the latter's invasion of Ukraine. What had previously been thought of as risk-free became risk-free no more, as non-existent credit risk was instantly substituted for very real confiscation risk. What occurred surely isn't lost on China, and Pozar sees the People's Bank of China faced with two alternatives to protect its interests: either sell treasury bonds to buy Russian commodities, or do its own quantitative easing, i.e. printing renminbi to buy Russian commodities. Pozar expects both scenarios mean higher yields and higher inflation in the West. Pozar concluded his note with a comment about Bitcoin. He expects it to benefit, but only if it still exists. Obviously, we saw what happened with President Biden doing the executive order today. Signals that it may very well exist in the future. And the possibilities of that obviously have increased with that executive order. So we'll see how this plays out. But yeah, I mean, usually money doesn't usually last this long for a period of time. Usually money's around for about 100 years or so before something else takes its form or a different shape on it. And then finally, let's take a look at Hive. And we got a little bit of news on Hive. So Intel, obviously, Bitcoin Bonanza chips to double giant mining farms hash rate. I wouldn't call Hive a giant, but they are very big in their mining space. So Hive obviously announced that the addition of Intel's upcoming chips would almost double its Bitcoin mining power from 1.9 to 3.8 exahash per second. The chips would be deployed in a new 100 megawatt renewable energy focus installation operated by Compute North in Texas. So we know that. We also know that Intel's ASIC delivery for another of its Bonanza Mine clients grid. Both companies expect the Intel provided ASICs to offer increased performance and power efficiency compared to other available mining chips offerings. So we knew that. But here's where we get to a little bit of the nitty-gritty of it. So Intel's BMZ2 pricing has already been non-officially disclosed as going for $5,625, which is a lot less than the Bitmain Antminers S19 XPs. Those are about $11,000, and then you still have to pay for the import tax, which is like 25% on top of that. So you're looking at close to $13,000, $14,000 per miner. And hopefully we won't have that import tax with the Intel miners here. So 5,625 per miner with performance rated at 135 terahash with an average efficiency of 26 joule terahash per terahash. Highest predicted hash power increase of 1.9 exahash after the successful deployment of Intel's miners tells us that the company is installing around 14,000 of the BMZ2 devices. So in pure dollar terms, that means that Intel Hive deal could be worth around $79 million solely on hardware costs alone. However, despite the gargantuan cost, Intel has its competitors between a rock and a hard place. The company is extremely competitive in both efficiency and performance, while undercutting its closest competitor, Bitmain's Antminers S19 XPs, by almost 50%. Bitmain prices its S19J at around $10,455, with pricing being pegged to Bitcoin's value and updated daily. And that is true. So Bitmain, from what I've seen, and I've purchased Bitmains before, is the way I think they price it out is basically how long is it going to take for you to recoup an ROI on it. So I think it's almost like 10, 12 months or something like that. That's basically where the price of the machines are roughly when they're going hot. So this is obviously good news for Hive and for Grid and for other guys that are getting into it. And on this chart here, we can see Bitmain obviously is here. So this is 140 terahash. And then you got the efficiency as far as joules per terahash. And you got about 20, they're about 21.9, I think, joules per terahash. And then you got the Intel Bonanza, which is 135, but they are at like 26. So they said it in here, 26 or something like that, joules per terahash, which is really, really good. So this is obviously a good deal. I think this is a really good deal. And I think a lot of the other miners are going to be looking into these as well. But here's the problem. A lot of the other miners have already agreed to buy miners from Bitmain. So they're basically paying double for what's like some of these newer guys, not yours, Hive's been around for a long time, but the guys that have waited to make a decision are doing obviously a lot better financially wise. So I think they should get maybe a little bit of a premium because it's going to take them about 5 to 6 months to get an ROI on those machines, whereas the other guys is going to take them to, depending on the price of Bitcoin, difficulty and everything else, but you're looking at approximately 10 to 12 months, even longer sometimes, depending if Bitcoin goes down, the hash rate goes up. So it could be 14 months before they get an ROI on their investment. So lower cost, faster ROI, it's a great thing for Hive. So great job by those guys, by Grid, and some of the other guys that are also getting those. I think Argo is getting them as well. So I think that's it. Oh, let's take a look. There's one thing else I wanted to show you guys here. And that was, so here are some of the miners that Hive has right now. So in that story, they did, Idelic commented on this, that they have a lot of miners that are not as efficient as the Intel miners. And that is true. They have a lot of miners here. Obviously, at the 80 terahash miners, they got a 74 terahash, a bunch more 74. They got a couple of 68 terahash miners as well. But I have no idea when these are going to get installed. We're waiting on information to see if those are even installed or not, or if they got paid on the order or not, because I don't have those written down here, so I'm guessing that they haven't been installed yet. But that's why they need to get newer, more efficient miners, because they do have a lot of these miners that are not as efficient. So that's it. I hope you guys enjoyed. Obviously, great news for crypto, for Bitcoin. Everything is looking good. The U.S. is into it. And we have obviously the executive order for it. So I'm happy for that. This obviously isn't all the clarity we needed, but at least it's a positive. So that's why Bitcoin was up obviously today. Miners were up today on it as well. And then we'll see if the monetary world changes policies to some different standard or not going forward in the next 5-10 years. We'll see if that happens. And then obviously great job by Hive getting these miners from Intel. So let me know what you guys thought of the stories in the comments down below. As always, if you enjoyed the content, hit the like button, subscribe, helps me out tremendously, and that's all I ask from you guys. So until the next one, have a great night. I'll see you guys in the next one. Bye.